Pretty much big pressure coming through from one player on the markets yesterday, and that Uchumi Supermarkets. We were chatting about it a little earlier. All this expectation built up with regards to what we could expect from the company in terms of earnings, and the company coming through yesterday disappointing in a very big way.
Well, that is true. The results came out really below expectation, but we actually encouraged because still this is a company that is really recovering from a low point. So when you look at it from an overall point of view, I think it did well, but it's just that it missed some of the sales expectations or projections that we had. Actually, what things that has really fueled the profit taking that we saw yesterday was about 2 weeks ago, the MD came out and he said he expected the sales to come out about roughly about 16 billion, and it came 2 billion less. So I think that's kind of that really led to investors taking off their profits from that stock, mainly because look, the stock has been one of the best performers in the market, and I think the results coming out the way they came out, the market is thinking, could it be this is the beginning of the end of its uptrend that it's had this year?
It's been a significant uptrend. I was saying to David a little earlier, 150% rise in that share price coming through for this year so far.
Sure.
You know, you highlighted some of the negatives that emerged in that report yesterday. Amongst the lot were rising operating costs. How realistic were market players being in the first place, not expecting these operating costs to have escalated this much, given the kind of expansion strategy Uchumi is now pursuing?
Well, first of all, the expansion, the strategy that they've had for the last 6 months, basically their plan was to open at least 6 branches, of which they have done. And I think mainly in the last 6 months, we were still operating on a high interest rate regime. Interest rates were an average of about 18%. So I think with that kind of environment and with no much traffic in terms of people shopping and all that, because also inflation was also high as well, I think the opening of the branches didn't really pull in enough sales to kind of break even. So I think as we have seen in the results, the operational costs actually were up about 20% vis-a-vis the sales that were also up, that went up about 30%. We expected the number to come a little, in the lower teens, but you know what, we were wrong. And I think going forward, we are hopeful that as rates come down and as people have more money in their pockets, then we think it's going to do well in the next for the second half of this year.
Did the company provide any further light on its dividend policy from here on out? There was a lot of hype around that dividend that was to be released yesterday, and we saw the first dividend in over 6 years being paid, but it came through at 0.3 shillings. So Rufus, any clarity from the company with regards to dividend policy from here on out?
Well, yes, you've correctly pointed it out that, actually the market, we expected a dividend announcement or a payout really for the next financial year. Not really next financial year, but we were thinking perhaps next year, like 2013 and the following year. But when the MD said that he announced a dividend payout of about 20 cents this particular year, that was really encouraging. But we saw the market really giving it a muted response, because the market dropped about 10%. So I guess maybe the market wasn't really jigged by that. 20% is still really low, despite the fact that these are a dividend that is being paid after 10 years of of non-payment. So I guess what the market needs really is they want to see the company maybe invest more of what it has in terms of cash reserves and the gains that they've already made, and investing in the businesses and in catching up with the rivals in the market rather than pay a dividend right now.
Certainly, Uchumi not the only player that came under pressure in yesterday's trading session. TransCentury continuing on its southward spiral as well, declining close enough to 2.5%. We've got that share price sitting at 20 shillings at this stage of the game. And earlier this week, we were taking a look at the company's strategy moving forward, the fact that it's going to be divesting from Chai Bora specifically. It seems that at this stage, the markets possibly a little bit skeptical about where this company is headed, or do we take it that the share price has run already on the back of that positive news and the announcement of re-strategy already?
Well, I think, first of all, after the announcement came, we saw a bit of an up move in that particular stock. But when we saw a bit of slide the day before yesterday, and actually yesterday, I simply think investors are beginning to understand that some of the projects that the company is on will take a bit of some time, and I'm thinking about 2-3 years out. And when we expect to see a bit of profitability and actually hitting its bottom line. So I guess investors are a bit the investors who are likely to be interested in this particular stock are long-term investors. But for speculators, it's not really an attractive buy.